Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money weekly roundup, our debrief on the biggest stories in markets and economics this week. I'm John Stepek, senior reporter and author of the Money Distilled newsletter. Merryn's out this week, so I'm again in the driver's seat, and backed by popular demand, we have none other than Bloomberg Opinion's Marcus Ashworth.
Hi.
Hi, Marcus. So, today we're going to get into all the big macro
problems.
stuff.
Yeah.
Exactly. Macro, that famously easy to predict and forecast thing that no hedge fund manager has ever come a cropper from attempting to do. But I thought we could start with gold, because gold has been the obvious big story this week, I think, with so it's hit a new record in dollars, also hit a nice big round number in pounds, 2,100 quid an ounce. And I suppose I'd just like to get your views on why this is happening just now.
Well, I like commodities generally. I think clearly gold is, just a technical analysis overview, is clearly going to carry on pushing up to new highs if you were to take the fundamentals away. So it's trading certainly in a bullish format. The fundamental reasons behind gold going up, I've got no idea, and I don't think anyone does. Quite clearly, what gold is being driven by in recent months and what have you is, in essence, is something bad is going on in the world. It doesn't matter where in the world it's going bad. So, for instance, we can see there's a lot of money still coming out of China, as in individual investors' money, trying to sort of perhaps put something away where it can be literally for a rainy day. So that's what's driving, I think. It's just simply it's constant demand. It could be what's going on in the Middle East. People want to get some money offshore. It could be indeed still the ongoing main driver, I think, is coming from both China and the state, but equally much more in individuals.
And so, because gold you can see as almost a form of capital flight from China, can't you? Is that fair to say? Because Chinese people can move it to gold.
Exactly that.
And even though it's still in China, it's kind of not. It's immune to what goes on.
Well, I'm not sure they're holding it in China, but that's sort of not the point, really, isn't it? But yeah, look, I think it doesn't matter where in the world. If something's going really bad and people need to get money offshore, we know what happens with Bitcoin from time to time, and gold is in essence exactly that. Now, you can extrapolate a lot of other, fundamental drivers of what's going on in the world. We can see bond yields going up a lot. Everyone's worrying about fiscal plans for whoever the next US president might be. I don't think that is necessarily the primary driver of gold, but I don't think it's holding gold back. Sometimes you would think gold would be going the other way because of it, but in actual fact, clearly at the moment, as it's a momentum trade, and people are prepared to be quite happily long it. And because if something bad goes on November 5th, 6th, 7th, at least you've got something which is doing extremely well. It's interesting to see silver starting to move as well, because that's the sort of the higher beta gold. So, and that my view is that gold is, you can't really call it an asset in a normal sense of the word, but it's a barometer of other sort of fear and greed index, and it's both benefits you both in greed terms and in fear terms at the moment. So.
Actually, I was going to, a couple of things, because at the very start there you said you're kind of, you like commodities at the moment, because that's interesting, because commodities generally, so gold has been going up, and precious metals have been going up, but copper and iron ore and all the rest of them, and oil actually is the obvious one as well, haven't actually, they've been going the other way.
So I meant more softs than I should be more specific.
Oh, okay, no.
Yeah, but I mean, the point here is that oil is if you want to look at one thing to tell you what the world's economy is doing, not stock markets, obviously you can look at the value of the dollar, you can look at the 10-year US Treasury yield, and you would look at oil. And every time oil goes, to be fair, below 70 at the moment, it's getting bought. So it shows you that it's got quite a firm floor at the moment, which is pretty low in some senses. Quite clearly, You would expect a test of 50 rather than a test of 100 at the moment. If you were looking at how the market's been trading, every time it tries to rally on Middle East fears and what have you, it comes straight back down again fairly quickly. And it's quite clear to my mind that the geopolitical concerns and how oil relates to them is nowhere near as big as it perhaps once was. The question is that most people in oil market, all they focus on is supply. As opposed to demand. Yeah. What's interesting at the moment is that, demand is very strong, actually, but supply is even stronger.
I see this is key, isn't it? Because you would look at the oil price by itself and your assumption would be oil going down means the global economy's slowing. But that doesn't. It seems to be more a supply.
Yeah, so it's not working in the way which I explained earlier. It normally would. You look at oil, you go, okay, that's the economy. It's telling you something about the global economy that oil prices are coming down. The other story, which is harder to get into, and I wouldn't say I'm an expert on this, but from what I can understand, is that the shift in China's demand is probably permanently down because they're shifting to gasification, they're moving to other types of ecologically more sound forms of energy, wind, solar, etc. And I think that is quite a fundamental shift that they are going to be requiring less and less oil deliberately. Yeah, that's a much longer term thing, but one has to understand that China can move the oil market and has consistently. We will see what goes on with India. It's still requiring an awful lot of hydrocarbons and other big economies in Asia, particularly like Japan as well. But for the moment, China has always been the mover of this, and that may well be no longer the case going forward.
Can we get into geopolitical conspiracy theories for 5 minutes here? Yeah. See, because I've been obviously reading a few things, and obviously one of the big sort of stories that always kicks about and has been kicking about for 20 odd years is this idea of China eventually having the yuan or the renminbi as a reserve currency.
Oh, units, aren't you? That makes fantastically named. What a winning sort of the BRICS currency of choice, the unit.
Well, no, actually, to be honest, I was thinking just the yuan rather than the BRICS, because I think the BRICS is a sort of fever dream by gold and Bitcoin kind of bugs, with whom I have a certain amount of sympathy, but I think that one's just daft. But what you're saying there is basically, so if China is building out electric vehicles to reduce its reliance on oil, and presumably most of that electricity can be generated at home, and it's simultaneously trying to build up its gold reserves so that it can effectively cut itself off from the US dollar system if it needs to or wants to, and can provide a sort of alternative global payment system, I guess, for the likes of Russia and all the other people who don't want to be. No,
not at all. Not a hope. It's further away than it ever was.
Yeah,
and that's one of the reasons. Going back to what we were saying about gold, the reason why gold's up is because exactly that. Not even the Chinese want anything to do with it. So, no, I don't. I think, and that's the problem. As I mentioned a second ago, the BRICS countries are together as we speak, and want to basically have. At some point, an alternative to the US dollar, but it's not so much the US dollar; it's the US dollar payment system, of which the OFAC, the Office of Foreign Assets Control, basically the US Treasury, can reach out across the world and make life very difficult, not just by grabbing sovereign reserves like they did for Russia, but they can block and do all sorts of things, rightly or wrongly. But the point here is that the alternative to the dollar would have to be the yuan, and it isn't ever going to be, because of capital controls and the way that the rule of law is not applied, should we say, in the normal sense of the word in China, means that any BRICS country or any BRICS alternative, like the units they're thinking about, will essentially be the Chinese yuan. It's not going to be the Russian ruble, and any correlation into India rupee, that's never going to happen, because India and China, for whatever reason, may have some element of rapprochement at the moment, but they are not friends and never will be. And likewise, in this context, Brazil and South Africa are not directly relevant. So in that sense, if they want to get together, it means they're essentially going to give control to Beijing. Is that better than giving control to Washington? Obviously not. So in that context, I think it's a non-starter, and it will continue to be. They will obviously be trying to push for into trade and denominations, and that's just smarts, and I perfectly understand that, and that's fair enough. But I don't think it's going to evolve into anything. What they are most keen on, though, is the payment systems, because separating away from using the dollar, it's the how that payment is monitored, and as we know, SWIFT, the Society of Worldwide International Financial Transfers, is essentially the payment system of the globe amongst the banking systems, and they want to find an alternative to that. And that's something which I think they will also struggle very hard to do. But I clearly see why that's their prime concern. So when you look at a BRICS currency, it's not really about the currency, it's about alternative payment systems which can move money between China and any other part of the BRICS sort of universe, but not getting involved in essentially a US-controlled banking payment system.
And is that where a lot of the interest in the CBDC side of things, the kind of digital currency side of things, come from?
It's slightly more subtle, but I went to the European Central Bank in June, and one of the things that really surprised me was the real desire to get a digital euro. Without really, I think, the concept of understanding what they're going to create and what monster they're going to be left with, because only 7 of the euro area countries have their own individual banking payment systems. It's quite extraordinary. So we have CHAPS, or you want to call it in the UK, and it's not replicated across the whole wide euro area. So they're reliant essentially on Visa, MasterCard, and what have you, and they really are unhappy about that. So their logic would be create a digital euro, and a lot of central banks are thinking on the same lines. I know the UK are obviously looking at it. That's more of a keeping up with the Joneses type thing, making sure that they're at least not completely left behind. But the concept of allowing the government to completely control every payment you make, and to my mind, is horrific. The alternative surely would be to create your own privately owned or non-government controlled payment system, but that doesn't seem to have quite dawned on anyone there. So
we could call it Bitcoin.
You'll never catch on. Just say blockchain a few times. It's very important to say blockchain repeatedly. Yeah, it's normally the answer to everything.
We should actually get you back on to have a longer chat about that topic, because that's actually really interesting. But yes, I think we'll wrap it up there for just now. But so thanks very much again, Marcus. Marcus's most recent column, ECB should shock and awe with half-point cut. Spoiler alert, they didn't.
But they are talking about doing it in December now, so I think I'm taking a win on that one.
And if you want to read more about gold's record-breaking run, I recently wrote about that in Money Distilled. And thanks for listening to this week's Merryn Talks Money debrief. If you like the show, rate, review, subscribe wherever you listen to podcasts. Do review, especially if you're going to leave 5 stars. And also be sure to follow us on X, or Twitter as it used to be known. Merryn is at Merryn SW, Marcus is at Marcus Ashworth, and I'm at John _Stepek. Who could have believed that somebody else would already have taken plain old John Stepek? This episode was produced by Summer Sadie, production support and sound design by Moses Andam. Questions and comments on the show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net.